Hello and good morning. I am Kurve-Karande and today I'll be doing a stock analysis in pharma sector or pharma industry. Before investing in any company, you should analyze the stock or you should analyze the company carefully. Based on the following parameters, today I am going to analyze my stock. First, we will have a look at the sector or the industry in which we are going to pick our stock. Then we'll study the company, its management, its shareholding pattern, etc., followed with the past performance of the company. We'll also have a look at the valuation of the company, and at the end, we will have a look at the future prospect of the company. So let me take you towards the next slide. Just a minute. Something went wrong. So the sector which I have chosen for picking a stock is the pharma sector. Why I have chosen this sector? We'll discuss this one by one. Okay, pharma is the only sector which is least affected by the coronavirus situation. The market is showing a downward trend because of the pandemic situation. So, in the prevailing situation, also, pharma is the only sector which is least affected. India plans to fund 1.3 billion US dollars to the companies who are involved in the manufacturing of drugs and medicines. Apart from this, Government of India aims to make India a leader in manufacturing of drugs and medicine sector by allowing 100% FDI. FDI is foreign direct investment, which means foreign institutions can directly invest in Indian company. So these are the reason why I have chosen my stock in pharma industry. Now, the stock which I have chosen is the Divis Laboratories Limited. So let's have a look at the company. So this company was established in 1990 by Mr. Murli Divi in Hyderabad. Basically, it's a Hyderabad-based company. So this company is involved in the production of API and intermediates. Now, what are these API? APIs are active pharmaceutical ingredient. These are the raw material which are needed by the pharmaceutical industry for the production of medicines or the final product. So these are the active ingredient which are manufactured by this company. Apart from this, this company is also involved in custom synthesis. Custom synthesis is exclusive synthesis of compound or molecule based upon the customer's demand. That means you can place an order regarding a specific molecule or a compound, and based upon your demand, your request, this company will produce the molecule or the compound. This company also supplies carotenoids and vitamins to nutritional, pharma, food, beverage, and feed industry. Carotenoids are color pigment which are derived from fruits, plants, vegetables, bacteria, algae, which have some added health benefits. So these are the functions of this company. Now let's have a look at the management of the company. Mr. Murli Devi, who is a promoter executive of this company, holds a doctorate in pharmacy. Mr. Kiran Devi, who is a CEO of this company, holds a post-graduation degree in pharmacy. Apart from this, he is also pursuing doctorate in pharmacy. He was involved in understanding the market for API in US before joining the board. Miss Nilima Motapati, who is the Director Commercial, she is basically involved in procurement of the raw material which are needed for the manufacturing of these APIs. She also administers all the aspects regarding the corporate governance and customer relationship. So this was all about the management of this company. The management looks pretty well qualified. Now let's have a look at the shareholding pattern of the company. 51.97% of the shares are held by promoter themselves, which is a good sign, which shows the confidence of the promoters in their own business. 91.08% are held by FII or FPI. FII are foreign institutional investor or foreign portfolio investor. Then 20.39% of the shares are held by DII. DII are domestic institutional investor, which include your bank, mutual fund houses, and also the insurance houses. Then the remaining, that is 8.57% of the shares, are held by retail investor like you and me. The very good thing about this company is that it has no pledged share. Now, what is pledging of share? Pledging of share means you can take loan against your shares. The promoters can take loan against their share, but this company is having no pledged share, which means this company is almost debt free, which is a very good sign. Now, let's have a look at the past performance of the company. Here I have taken 3 years data with respect to sales, net profit, earning per share and ROCE. We can see that there is a high jump in sales from the year 2018 to 2019. And this is roughly 25 to 30% hike in the sales figure. Also, the net profit have jumped from 870 to 1,333 in rupees in crores. Then the earning per share of the company for the year 2019 is 50.02, which is pretty good. Okay, now this EPS is earning per share. That means per share, or behind every one share, how much you are earning in percentage terms. So if you are having one share of Divis Laboratories, then you are earning 50.02 percentage return in the year 2019. Now, what is ROCE? ROCE is return on capital employed, and the figure for return on capital employed for the year 2019 is 25.48. That means if you are investing 100 rupees for a for every 100 rupees, how much income you are earning? So the figure is 25.48. After every 100 rupees, you are earning a return of 25.48 in percentage. Then let's have a look at the valuation of the company. The market capitalization of the company is 63,599.64. Market capitalization is the net worth of the company if you were required to buy the whole company. That means if I plan that I want to buy the Divis Laboratories, then how much money I need to pay. So this figure gives me the amount which I need to pay to buy the whole Divis Laboratories. Okay. Now, next comes the PE ratio. PE ratio is 49.95, which is very high. Actually, the PE ratio should be, we can say that lower the PE ratio, it's good. Okay, PE ratio is the price which you are paying to earn the EPS. EPS was 50.02. So to earn the EPS of 50.02, you are ready to pay 49.95 times of the EPS. So I generally feel that the PE ratio should be comparatively lesser than the industry PE. The industry PE is roughly 30 to 31%. That means the PE of the whole pharmaceutical industry is 30 or 31, and it is quite high than the industry PE also. So okay, so next is the debt to equity ratio, which is 0.02%, which is almost negligible. That means we can say that the company is debt free, which gives us a thumbs up for this company. Then inventory turnover ratio, which is ITR. Inventory turnover ratio is 2.93, which means that the company is manufacturing and selling the product in one cycle or in 1 year is 2.93 times. They are manufacturing and selling the product for 2.93 times in a year. Now book value is 266.61. What is this book value? Book value is the value of the company which is written on the book, or which is as per the accounting book. And this value is derived from the physical assets of the company. Then is the market value of the company, which is the current price of the company or current price of the trade. Then we'll have a look at the price to book value. Price to book value is 8.96. Price to book value means how much times you are ready to pay to acquire this stock. If you divide this figure, that market value 23, you divide this 2390 by 266.61, you will get this figure, that is price to book value, which means that you are ready to pay 8.96 times the value of the book to acquire one share of this company. So this was all about the valuation of the company. If you have any doubts regarding the valuation of the company, you can mention it in the comment box. Now let's have a look at the technical of this company. I have taken the screenshot a day before, yesterday. So here you can see a big green candle followed by a high volume, which gives. Also, you can see here that this MACD, which is a blue color line, is almost cutting this orange color signal line from below, which gives us a signal that this company or the stock price of the company is going to rise in the future. Okay, so we'll move toward the next slide. Now let's have a look at the strength and the weakness of this company. This company has 3 R&D centers at different locations where more than 350 scientists have been stationed for the manufacturing of new molecules or new compounds. Apart from this, this company focuses on export. Nearly 70 to 80% of the revenue of this company is generated through export. They have a diversified customer base. They mostly have their customer in US, Europe, and Asian countries. Now, the weakness of this company is that the stock PE is higher than the industry PE. As we discussed earlier, the company PE was 49 point something, and the industry PE is only 31. So, this stock is quietly overvalued. We can say that the stock is overvalued as compared to the industry PE. And the reason may be as the fundamentals of the companies are very strong, so the people are ready to pay any amount to acquire the stock. Secondly, the stock is trading at 8.96 times its book value. Also, we discussed this point in the previous slide that we are ready to buy this stock by paying 8.96 times to the value towards its book value. Okay. Now let's have a look at the auditor's report. Pricewaterhouse is the auditor of this company. Auditor's report helps us to give a true and fair view about the company. If the auditors says that the company has a true and fair view, which means that the figures which are mentioned in the financial reports are reliable, the numbers are not cooked up. So here we have got a true and fair view. It looks pretty good for investment, but we can also say that the stock is little overvalued as compared to its peers. But the stock is good for long-term investment. So what I recommend is, if you want to invest in this stock, invest in bits and pieces. What I mean by bits and pieces, if you were to invest 100 rupees, instead of investing the 100 rupees in a single shot, you should break your 100 rupees in 4 equal parts or 5 equal parts and invest it accordingly. Okay, so I with this I'm signing off. Till then, bye bye. See you next time. Stay home, stay safe.